The Indian currency rupee breached the psychologically crucial 80 mark again today to touch another fresh all-time of 80.44 against the US dollar. According to the online currency converter XE, OMR1 was fetching approximately INR209, bringing smiles back on the faces of Indian expats. Many Indians rushed to exchanges houses to remit the savings back home. The Indian currency had closed at 79.97 the previous day. This sharp depreciation was because of the current strength in the US dollar index. Indian stocks declined, though marginally, on Thursday morning in line with weak global cues, following yet another policy rate hike by the US Federal Reserve in its fight against high inflation. However, a steep decline was likely cushioned as investors seem to have already discounted the possible rate hikes by the US Central Bank. The big question from the Indian market perspective is whether India's outperformance will continue in the present global risk-off context. Investors can remain optimistic but be cautious as India's valuations are on the higher side, said V.K. Vijay Kumar, Chief Investment Strategist at Geojus Financial Services. Financials, capital goods, select autos, telecom and construction-related stocks can be brought on declines, Vijay Kumar said. The key policy rate in the US was raised by 75 basis points to 3.0 to 3.25%, which is the third consecutive hike of the same magnitude. The US Central Bank seeks to achieve maximum employment and inflation at the rate of 2% over the long run, and it anticipates that the ongoing hikes in the target range will be appropriate. Reacting to the rate hike move, stocks in the US fell nearly 2% to close the day. Consumer inflation in the US, though declined marginally in August to 8.3% from 8.5% in July, but is way above the 2% goal. Raising interest rates is a monetary policy instrument that typically helps suppress demand in the economy, thereby helping the inflation rate decline. The US Fed statement added that the committee's future assessments would consider a wide range of information, including readings on public health, labor market conditions, inflation pressures and expectations, and financial and other international developments.